I would like to welcome to the stage from the National Credit Union Association, Kyle Hauptman, our current chairman of the board. Please join me in welcoming Kyle.
Oh, stay on.
Yes.
Hello.
Well, hello. Thank you for coming back and joining us. There are a lot of familiar faces in the room.
Yeah, but what is CUSCU? I get that.
SS, yeah. So it's Credit Union Shared Services.
Shared services. Okay.
Yeah, so we just had all our panels come up and talk through what some of those are, but it's technology, fractional leadership, retirement planning, things like that.
And I get the pun. People from south of the border, they refer to cursing, which is how I grew up, as cussing. So I get that.
So you've, I know a couple of the topics that we've just been discussing are passionate for you, and you've fought for them, for us, succession planning and modernizing technology. Can you tell us a little bit more?
Yeah, I didn't love that rule. I thought that succession planning is important. It's unclear to me whether or not the succession planning requirement will necessarily have that effect, right? There's a difference between that. I did vote for it. It was a 3-0 vote at the time because I sort of traded my vote for an agreement that within 3 years, if it is not actually doing what it's supposed to do, a mathematically lower rate of mergers, because that was the rationale, right? Credit unions go away because lack of succession planning. That part I don't agree. I don't dispute that part. It's whether or not the rule and the form would have an effect, right? And I put up on the screen the FDICs, right? The bank's merger rate, the number of mergers goes down exactly the same as credit unions, right? Bank consolidation is exactly the same as credit unions. The slope of their line is identical to credit unions. So I said we're going to put up unless the FDIC does a similar rule, 3 years later, FDIC slope, okay, how many banks there are, and the downward slope of number of credit unions prior to the rule. And if there is not an appreciable difference, the rule should be sunset, meaning the board at that time should have to affirmatively vote to approve it, right? And keep in mind, I didn't have any leverage. This is all I could get. It was going to be 2-1 win, right? So, when you're the third vote, you don't have a lot of leverage, but that's what I got into it. So anyway, the other thing was modernization, technology. That's never ending. Anything specific there we can get into?
Yeah, I mean, specifically, I do think that you think it's important for credit unions to collaborate with fintechs, right? And continue to build alliances.
It's important for them to do what they need to do to change the way credit unions always have. Believe it or not, credit unions changed without NCUA. Can you imagine that? That before 1970, credit unions actually innovated and did things without government oversight. Can you even imagine that? Credit unions even existed, thousands of them, before the 1930s, before deposit insurance was created. So it's not that I want them to collaborate with fintechs per se. It's not my business to promote any fintech or any technology. It's that credit unions don't need me to tell them that life changes, that the way we bank, the way we do business compared to 30 years ago, it's night and day. And if you tried to stay that way, you wouldn't even be here. And 30 years from now will not only be as different as 30 years ago, it'll probably be even more different because technology accelerates.
Can I go off script?
Yeah.
Now that you're up here. But I think that we've been talking about this evolution, right? Evolution of credit unions, evolution of this industry. How do you think the NCUA is going to evolve?
Well, the regulator and insurer, I think it's very important. The one positive of I would say AI. The government tends to look better on technology when they use it themselves, okay? So in my lifetime, this is my opinion, there's been 3 huge things, right? I would say number 1 was the internet, number 2 is crypto digital assets, number 3 is AI, okay? I'm gonna throw mobile, right? I'm gonna throw that in the internet category because we already had phones, right? I'm gonna throw that one in there, but those 3, of those 3, internet, United States won, right? And it's not the Olympics, it's not a competition, but one means you're gonna get the downsides, right? I always say this, right? There was not a single plane crash before we had planes, right? You can read the whole Old Testament, New Testament. There are no ransomware attacks. There are no auto fatalities, whatever. Do you want to go back to that? No, but we're going to get the negatives, right? And when they say, are you worried about digital assets? Is there going to be problems? AI? Well, I know there's going to be. We know there's going to be. Boy, there could be worse than we think. But the question is, as Americans, are we going to do what we do very well, which is monetize innovation? Okay, our neighbors in Canada and Mexico, they got all the negatives. Now, some of the negatives are truly evil stuff, ransomware, cyber attacks, that kind of thing. But even those have very good paying jobs in cybersecurity, that kind of thing. But the economic dislocation, it's not evil, it's just the way life goes. That negative, right? They lost all their video rental jobs. We lost all our video rental jobs. But because generally in this country, we let Americans do what they do best, work hard, innovate, and compete, unlike everybody else, we got all those negatives. We don't have newsstands much anymore. We don't have travel agents, used to be in every strip mall. We don't have people renting VHS tapes. Same with Canada, same with Mexico. But we got the headquarters for Netflix, Hulu, the jobs there, the employees that had life-changing wealth because they had stock options early, the angel investors, the venture capital funds, the endowment funds that invested in those. We're going to get the negatives, and there's not much you can do about it, right? Is AI going to cause mayhem? Oh boy, is it. Every widespread technology does. The question is, how much upside are we going to get? Because a lot of parts of the world get most of the downside, right? They don't have any jobs in the streaming industry, yet their people watch streaming. That's all they got, the consumer use of it, not the jobs, not the investment, right? Doesn't that suck to get all the downside? But anyway, of those, AI, which the government uses, public service announcement, the IRS uses it, trying to determine who to audit, okay? NSA's used it for a long time, trying to look at phone chatter. So government understands AI. We use it, very rudimentary learning models when your call reports come in, right? What do we look at first, right? What number do we got to look at? That's either a typo or something's up, right? Digital assets is tougher because most people in government couldn't see it was useful, and then you only hear the negatives, right? Imagine all you knew about the internet was not getting yourself a cab when it's raining, right? Was not speaking to your loved ones via video. All you heard was the stuff that is bad. Ransomware, cyber attacks, right? That's all you knew, and that's how digital assets was. But it's good to see we have a new change in Washington. Genius Act, as of today, I have 266 days to complete the Genius Act rulemakings, July 18 of next year, right? Luckily, Treasury, OCC, I think are going to do most of the heavy lifting on that. So we're going to copy and paste. I want to make sure I say this before I get off the stage. Stablecoin legislation, Genius Act. I'm required by July 18 to put out at least 3 rulemakings. There's a 4th, which Congress says is optional on interoperability. So we don't have a beta VHS problem with the two, my coin's worth $1, your coin's worth $1, but somehow we can't get it done. Anyway, 266 days on that. And we can talk about Genius Act you want. It's obviously top of mind because I've been ordered by Congress to get this done. And I think stablecoins are really cool, and they are, remember we said most people in government didn't see how crypto is useful because there's a lot of BS out there. No two ways about it. You want negatives, they're out there. But they couldn't see the positives. Stablecoins were the thing where most people got it. And the selling point in Congress for the 60-something senators that voted for the Genius Act and the 300-something members of the House was this country has $40 trillion in debt, and boy, do we need people to own U.S. dollars and buy U.S. treasuries, right? That was an understandable thing that anybody can get, right? We do not want what happened to the British 70 years ago, where the pound was the global currency, and they had all the advantages we do now, where our businesses have way lower foreign exchange costs, where we get to have deficits and spend money and don't actually have to have the market. And we have a global market for buying treasuries because they want dollars. If the dollar stops being what it is, if you think interest rates are high now for mortgages, wait till the U.S. loses reserve currency status, right? It used to be the British pound, Spanish peso, Dutch guilder before that. We don't want that to happen. Anyway, that was the impetus behind it. There's a number of elements I think people aren't thinking about, at least from what I read on stablecoins. And in this room are probably people who are going to issue stablecoins, and you're certainly going to use them eventually, right? Banks and credit unions can't issue stablecoin. Bank subsidiaries can, and for credit union, it's QSO. I was very impressed actually with Senate Banking and House Financial Services. You don't see credit union service organization actually in Congress. You don't see that in legislation. They actually knew what that was and put it in there because credit unions don't really have subsidiaries. And there are a number of things. Liquidity. The most important thing for a stablecoin is to remain stable. It has to be worth, if it's $1 US, there cannot be a moment's hesitation. I just gave a whole bunch of word salad at you, so I'm going to stop. But I have more to say on stablecoins, but I want to give you time to breathe and
Well, no, I think that we also want to open it up and get some questions from the audience. And so as we're looking around and maybe running a mic and getting some questions, maybe Ryan, if you'll help me come grab a microphone, and anybody that puts their hand up can ask a question, because thank you for being open to that. But while he's doing that, I have a question. Credit unions are on stage, on the general stage and the breakout stages all over Money 2020 this year. And it's the first time we're kind of infiltrating in the numbers that we are. And with that in mind, I'm moderating a panel with some esteemed guests that you see around the room. Any advice or anything that we should make sure that we focus on?
Well, first of all, shout out to Sue. She's done a phenomenal job.
Absolutely.
She's been a matchmaker, right? Money 2020, this is one of three. This is Money 2020 USA. The other one is they do Bangkok, Thailand, and Asia, and I believe Amsterdam, right? I remember talking to them. They said, we picked party cities, right? We could have picked Denver, Singapore, and London. No. Bangkok, Amsterdam, Vegas. I went hoarse here, explaining to people. A lot of people come from overseas and a lot of fintech. NCUA, they see my badge, over and over and over again. Do you know what FDIC is for banks? It's like that for credit unions. And then credit unions are kind of an American thing in terms of their prevalence. But a phenomenal job. The first time I came here was October 2021 as a look-see. And it was called Money 2020. I didn't know. I actually thought that maybe that was the year. I know it was 2021, but we just had the Tokyo 2020 Olympics that were in 2021 because of the pandemic, right? I thought, maybe it's the year, and they're just doing it delayed because of the pandemic. But Sue's done a phenomenal job of just matchmaking the credit union world to Money 2020 to get them into the mainstream, that there is this thing called credit unions. There's 4,000 and change of them. By the way, shout out to whoever mentioned Australia earlier. There's a lot of countries like that, consolidation. I lived in Australia for a year. I think the guy was getting at, there's 4 banks, guys, 4. Imagine all we had was the $4 trillion banks, Citi, JPM, B of A, and Wells. That's it. The Australian government literally has a policy called 4 pillars, meaning they won't let any of them merge because now you're at 3. I think it would work fine if we only had those big banks, if you were a U.S. citizen, spoke English, were credit visible, had a FICO, had a social security number, had a regular W-2 direct deposit job, and neither you nor your family, nothing about your life set off any alarms at FinCEN, overseas use of cash, certain industries, income that's not regular. And the type of person who meets all those, it's not a coincidence. That resembles a government employee. And that's who's writing the rules. So we do not want to be one of those worlds. We need every little niche. I love that there's a credit union in Florida that'll answer the phone in Haitian Creole. I love that in New York, in the theater district right in Times Square, there's the Broadway actors credit union. Like they knew that Broadway closed. I remember they were talking to them. They kept talking about the Lion King loans. That was their phrase because it was so important the Lion King production opened back up because they had all these loans, right? We're a better off country, but open for questions. But I know that in the little chats I've been having, Genius Act's the main one. What do you got?
One down.
Hey, I'm Simi. I'm actually working on a startup right now where I'm building Crebit, which is a stablecoin powered cross-border payment platform. I just left Stanford and we raised $3 million from Andreessen to build this out full time. And right now we're starting with the wedge of helping international students pay their tuition with stablecoins, and we're working with Stanford Federal Credit Union to integrate with their payment portal. But I think one issue that I'm facing and would love to hear your thoughts is just general advice you would have for fintechs on how to build trust, especially with new technologies, whether it be crypto, stablecoins, AI. What advice would you have for me to build that trust?
I don't think it's different than most any business, a hotel, whatever, building trust, right? You start with experience number one and go from there. I think the trust issue on stablecoins, right? I like you mentioned overseas because the people who knew that we had a problem were immigrant communities. The Democrats in Congress that were part of the blockchain caucus, go back a couple of Congresses before crypto was mainstream. The Democrats who were in favor of it, they all have one thing in common. They were from immigrant districts. People who have to send and receive small amounts of money and know you cannot do it without getting absolutely ripped off, right? International companies don't have a problem. Coca-Cola does billions a day, right? But if you ever try to send $100 somebody in another country using traditional rails, you cannot do it. It is mathematically impossible to send $50 to somebody. My institution, I get $30 charged for incoming and outgoing international wire. That's just on my end. and then there's a charge, right? So the overseas payments to not get absolutely scalped. I think credit unions are going to start doing remittances and foreign payments. They didn't before. Why? Because it was an epic pain because of FinCEN, because of KYC, AML. It's now going to be a lot easier. I think the burden on stablecoins is on the issuers, and that is what I have 266 days to do the rulemaking on. The liquidity aspect, that's where we're going to lose this, okay? Stablecoin has one job, be stable. We've seen it or not. 2 years ago during the Silicon Valley Bank thing, USDC, you probably know what that is, US dollar coin, issued by Circle, spelled the normal way, Circle. It traded down to 89 cents because even though they had the money, they had more than $100 for every 100 USDC out there. What was the problem? Where was the money? They had it at Silicon Valley Bank, $3 billion, 2.999 of which is not insured. So it traded to 89 cents. That was what can happen. So the big thing, just to pivot off that, when you talk about trust, as soon as any of these stable coins isn't stable, and when people build their lives about it, they send it to their family, it's one part of a transaction, okay? If you sell your house for $1 million and you agree to settle in a million, underground coins, what if it trades down to 89? You sold your house for 890 grand. What if you then owe that moment $1 million to somebody else, right? Has to happen. And we're here in Vegas. When I explain them, stable coins, hold on, I have a prop. It's in Vegas. Here's a casino chip. This is a $100 chip, and this is a $100 bill. The room we're in, all of this $4 billion hotel, all of it rests on one thing, that this is interchangeable for this without hesitation at any time. What would happen down the casino floor if there was a rumor got around, hey, they don't have enough to pay us out? Did you hear about that? Maybe there was an Ocean's 11, robbery or something, right? Even if Las Vegas Sands Corp was going to make us whole, right? Let's say we're not going to rip it off, but they'll make us whole. It's a global, massive company. People want to, what would happen? Everybody would get up and run to the cashier because who wants to be the one right after they run out of money, right? What would happen in that line, right? If people think they don't have enough money to pay us out, there's been a robbery, there's a fraud or whatever, a market would develop in that line. Hey, I got 1,000 chips. I'll tell you what, I'll sell them to you for 800, and then you go try your luck. If that sounds familiar, because that's how the bond market works, okay? The Argentinian government owes me $100 at the end of the year. No one disputes that, but I'll sell it for 80 right now. That's how the bond market works. Things trade below par and above par, but that cannot happen, and that's on us, and that's on the regulations. The biggest problem, this has to be that. This is people's compensation. You tip the cocktail waitress, right? So, I had a good shift. I got 500 in chips. No, you don't have $500. You have 500 things that total 500. Somebody bets and says, I won 100. I doubled down, I won 200. Why do we say that? Why do we use those words? Because we assume that this is worth 100 American dollars, and without a moment's hesitation. No, not going to pay me tomorrow. Even the high rollers that don't use cash, that wire millions in, they have to be wired out on the spot. On the spot. So what happens with this? Congress says if you have 100 underground coins, right, you have to prove you have backing. Combination of cash, U.S. Treasuries, remember one of the political appeals was the world will buy Treasury bills, and then Treasury repo, which is just a collateralized loan using a Treasury. All right, it's Friday night, 10 p.m. And remember, we're going to have a lot of little coins. People might cash out. There may be a bank run on them, right? Stable coins have to be able to survive a run. They have to be able to cash out all of it on a spot. 10 p.m. Friday night. All right, I want to get all my underground coins. All right, I got 30 in cash. There you go. But the other 70 is in Treasuries. Treasury market doesn't open until Monday. Treasuries trade T+1 Tuesday. They have the money. That's good. That's one problem solved. Underground, who issued a coin, they got the money. But I don't want to get paid Tuesday. I got to get paid out right now. This is part of a transaction. I'm relying on this. I know this is a long offshoot of your trust question, but this is what I get at. Okay, it's this. I wanted to make this point before I got out, and that was my plan. Yeah, answer the questions you want, not what you get, right? But anyway, so how do you cash them out on the spot? By 10:01 p.m., the underground, they got to get paid out. You got treasuries, they don't trade till next week. I think in the short run, the answer is some kind of liquidity facility, right? A big bank or something, or have a credit line with you, which they'll loan you because they know you got the treasuries. It's a 4-day loan or whatever. I like it because it's another set of eyes making sure that you got the money. I'll front you the money. In the long run, this won't be an issue because tokenization will solve this. You'll be able to sell your treasuries Friday night at 10 p.m. and this won't be a problem. But for now, it's a big problem. I really wish I gave you something of value and all that, but I knew I wanted to get that out because I get asked about it. Sorry about that. But trust is not any different in yours than anything else, right? One thing about selling to credit unions buy from other credit unions. Different than most industries. Your church credit union doesn't really compete with your military one. Most businesses, if I have you as a vendor and you're helping me, my life is better, I don't want to tell my competitor. I might even put in the contract you can't sell to them. Credit union world is a little different. You get one credit union CEO that thinks you helped them and made their life better, you're in good shape.
Thank you very much. Let's give a round of applause to Mr. Kyle Hauptman. Appreciate you being a supporter of the underground and everything that you've...
I had 4 bullet points I wanted to say, and I was going to shove them wherever
well,
they
do
came. No, I said them. I'm just saying I was going to,
Adam, no matter
sorry,
the question.
whatever the question. You could ask
well,
me
I
what time.
think that's an important, valuable skill for someone to learn when they're speaking to not only high-powered executives, but also government
For a
officials.
startup, a positive of credit union world that is very different than everybody else is if they have something that helps them, they'll tell better, right? Hey, do you mind talking to the other credit union? They'll do it in a way that banks and most industries, hotels, do not. That's a positive you have.
Absolutely. And Stanford Federal Credit Union is a great credit union, so it's a great place for you guys to start. Thank you again. Thank you.